to give us a perspective on how he's viewing markets. Dipan, it's going to be likely another very tough day of trade. How should one look at it? How should one position themselves? Should one start buying the dip? Wait? How should one play it?
Yeah, hi, good morning, and thank you for having me on your show. I think despite being 35 years in the market and seeing so many such days, yet, you are kind of, you feel that, you are paralyzed over here. And intuitively, you should be looking at buying. But the real problem here, is that there's very little cash in investors' portfolios. And even domestic mutual funds are running, I think, a bit thin. Inflows were at multi-month lows. And we all know that stocks are at attractive valuations, but the big uncertainty here is how long will this conflict last? If it's just 4 or 5 days, then market will come back very strong. But if it's a bit longer, then certainly the sentiment will wear us down even more. And this is not like a war between Ukraine and Russia, which hardly had any impact on us. Any West Asian crisis has a deep impact on India because of oil, because of remittances, because of exports, because of close ties. So I would just say that just wait and watch at this point of time. And definitely, I think if stocks come to levels which are super attractive and you've been tracking them for so long, this is a good time to buy, but it requires courage. That's all I can say. It requires courage.
Deepan, hi, morning. How do you look at some of the defense stocks? Because those are I think that's one of the sectors which is a little active because of this. You have HAL getting fresh orders. You have BL, which is likely to get more orders in the month of March because the CCS is expected to clear some more orders for them. How do you look at some of these PSU defense stocks now?
See, I think that the future growth is discounted, largely discounted. I mean, they're looking at multi-year orders. For example, HAL, whether it has an order visibility of 3 years or 4 years or 5 years, it doesn't really matter. End of the day, it boils down to execution. I think defense is all about execution and managing the quarterly volatility. And I would remain invested. I think we've got already small investments in Hindustan Aeronautics and BEL. But from a fresh investment perspective, at these levels, at these valuations, I don't think the risk return favors you. There'll always be a time to buy defense stocks, and that's when there is peace. And once there is little peace and geopolitical events go out of the background, there could be 1 or 2 soft quarters. That's a good time to enter into defense, which still remains like a multi-year long-term investment theme. But I would prefer not to buy at such highs and when there's so much of focus on them. Also, one needs to keep in mind that there's a sense of over ownership in these companies as well. And that would mean that future returns may get muted. I'm not saying that you will not get good returns. It's just that, in my opinion, in times like this, you look for opportunities outside of the stocks in focus. Some of the beaten down stocks may offer higher returns. And this is a great time to buy good quality mid-cap stocks of businesses which are outstanding.
Okay. Deepan, but I'm sure that there are pockets to hide in at this point. So while there'll be a larger uncertainty, you could say that there will be sectors maybe relatively more domestic facing, say, for example, healthcare, which could have, which wouldn't see as big an impact. You believe this is a good point to start buying some of those names?
At the end of the day, the war will have an impact on all sectors, a little bit more, a little bit less. But yeah, sure, I think, certain domestic focused companies, FMCG, pharma, they may be safe places to hide. But, I've always seen in times like this, the investors don't think in terms of putting money into safe industries or safe stocks. They're either paralyzed and not knowing what to do, or then the smarter ones look for good quality businesses, as I said, which they were always wanting to buy, but they couldn't buy because valuations were really steep. And now the entire market has corrected, and that provides an opportunity. Investors also are looking at their portfolios closely to see if they can reshuffle it to improve the quality. And that's, I think, where the kind of thought process goes. I mean, actually, at the brass tracks, all these theories that we should buy safe stocks and all don't really work, because your portfolio has to be well diversified. And one cannot let go of an opportunity like this, a crisis like this, to look for stocks, which, like say 1 year, 2 years down the line, can give great returns. And overall also market was correcting before the war came into place. Now we have even a further correction. So I think the focus has to be more on those businesses where you feel that they can give superlative returns over the next 3 years or so.
Okay.